Morning everyone, welcome to another RF Crypto video. Today's markets haven't really moved. They're down by 0.02%. It is quite boring. Bitcoin, Ethereum, Cardano, XRP, they barely moved. I mean, 2% is quite a bit of a move, but compared to the rest of the market. However, this is just due to the momentum that Cardano gained in the last week, where you can see that it's gone up by 12%. The rest of the market moving quite slowly. And this was to be expected because there has been no great news. The markets are now consolidating. People are seeing what is the next best move. So they're holding tight onto their money and they're seeing where to put their money going forward. Looking at the price of Bitcoin, we haven't seen much of a movement. Obviously, we have 4 green candles here, but the movements aren't significant to even count because we had a drop here and these 4 green candles represent a recovery of this drop. So 4 green candles equals 1 red candle. The bears tried to push the price of Bitcoin above the $30,000 support level. However, the bulls got into the market and pushed the prices right back up above that level. Otherwise, there's nothing to talk about in the Bitcoin charts. It's just a matter of seeing where it moves through this phase of consolidation. So key US senators introduced crypto bill outlining sweeping plan for future rules. This bill would basically liberate small-scale purchase of goods and services from the mire of tax implications by making transactions of less than $200 tax-free and potentially clearing a path for cryptocurrencies to act more like a currency. So if you spend less than $200, you won't pay any tax if this bill goes through. And this is a good thing in terms of turning it into sort of a currency, because if you make everyday purchases like buying a coffee or buying food at the restaurants or just everyday normal purchases, if this bill wasn't proposed, then you'd have to pay tax on every single one of those transactions. However, with this bill, all those transactions are going to be tax-free, which will make it easier for you as a consumer to use these cryptocurrencies as actual currency and for everyday use, which will increase adoption very, very quickly in the United States. So there are some points of this bill that are the most important. One of them is that the bill would define the terrain between crypto securities and commodities, and this will give clarity to the crypto issuers in terms of knowing what they're going to launch or what the purpose is. So there is clarity on sort of the categories of crypto, and crypto assets would fall under ancillary assets overseen by the CFTC. Also, the lawmakers would give the CFTC authority over the spot markets and crypto commodities, and this would carve out a key new powers for the federal watchdog that now doesn't have much reach into the cash markets. And this will help the CFTC regulate this market, prevent market manipulation, bring those who are manipulating the market, especially people on social media who are shilling and shilling and shilling, they can bring them to justice and prevent people from losing their money. Also, it gives clarity in how to handle customer holdings. It will give clarity on how these custodian companies hold the assets. It should be independent from its balance sheet. So if the company goes bankrupt, at least they have those assets to give back to their customers. And this will be very beneficial to everyone because it will ensure that consumers are protected, and it will increase adoption of cryptocurrencies because now people will feel a lot safer. It will also clarify the meaning of a crypto broker, especially hoping to protect wallet providers, software developers, and others from being snagged by certain tax reporting requirements. So tax reporting requirements in the United States for crypto, they're all over the place. However, with this clarification, it means that now we have a category of who pays what tax, and we have another category to see who pays what tax. And this separation is very important because you don't want to mix and match and create so much confusion. Also, under this legislation, the crypto companies that are watched under the CFTC would have to pay some fees to fund the agency, which is similar to the model that companies listed in the exchanges pay these fees to the SEC. So they're just copying this from the SEC to the CFTC, which kind of makes sense because they need to be funded. And what a better way to sort of indirectly tax them than to have them pay fees to the agency. A very important one is the creation of an industry sandbox, whereby regulators will let crypto firms test new products on a limited scale and duration. This one I think is the most important one because it will allow these crypto companies to test new products, because a blockchain is revolutionary, so new products are always coming into the market. This type of sandbox will enable these companies to test any new product, obviously with oversight of the CFTC, and it will make sure that it's done in a responsible way, in a way which protects investors' money, and it will prevent a lot of these rug pulls and scams that are coming up with revolutionary and new types of products. Also, in terms of stablecoins, they want to move towards 100% reserve, asset type, and detailed disclosure requirements for all payment stablecoin issuers. And this would create a new framework for banks and credit unions to issue stablecoin, but issuers wouldn't have to become depository institutions. That would mean that the reserve requirement would become 100%, meaning that for every stablecoin that is issued, they have to have one liquid dollar in their treasury backing those stablecoins. So if they have $100 billion of stablecoins in circulation, they have to have $100 billion in cash and cash equivalents, very, very liquid, to back those $100 billion stablecoin worth in circulation. And this makes sense to prevent another UST from happening. So this is very, very important. The US is moving towards creating a federal regulatory framework in order to make sure that these companies are regulated correctly, to make sure that the industry is also regulated correctly, and most of all, to ensure that customers and participants in this industry are protected at all costs. And this will have the effect of increasing adoption of cryptocurrencies and also proliferation of new technology relating to blockchain and relating to crypto by extent. Very exciting times ahead. I hope that this bill passes, and I hope that a regulatory framework can be issued before the end of the year. Remember, Joe Biden has issued an executive order so that they can facilitate and accelerate the creation of a federal regulatory framework that will govern the entire industry and will make the US a major crypto hub. Also relating to before, 75% of retailers are eyeing crypto payments within 24 months. 3/4 of the United States, they want to accept crypto or stablecoin payments within the next 2 years. This may be due to the fact that a regulatory framework for cryptocurrencies will come into effect in the next 2 years. So these retail companies will be more comfortable in accepting crypto or stablecoin payments because they will be compliant with regulation. With a framework, they will know what rules they need to follow. Therefore, they will be compliant, and it will make business a lot easier. Large retailers are also spending over $1 million on building the required infrastructure to make this happen, which is a large investment if you think about it. And if they're spending so much money building this type of infrastructure, it means they believe that blockchain and crypto is the future and it's here to stay. So they're investing to be sort of like early adopters in terms of the commercialization of blockchain and crypto. And but when crypto becomes popular, these retailers will reap the rewards. Also, 85% of the surveyed merchants anticipate that cryptocurrency payments will be ubiquitous in their respective industries in 5 years, which means that almost all of the merchants that were interviewed, they basically say that crypto payments will be the norm. You'll be able to pay with cash, you'll be able to pay with crypto as easily. And this is very promising news. Combining this news with the previous news of a federal regulatory framework in the United States is fantastic news for the whole industry, because as we know, whenever the US moves in a certain direction, the whole world follows. So if the United States gets the regulatory framework in place and issued by the end of this year, or even mostly next year, then I see the rest of the world, especially the Western countries, moving in that similar direction, and the whole world will sort of be like a globalized village of, it is already a globalized village of traditional finance, but it will move away from more TradFi to centralized financing and also mostly decentralized financing, so CeFi and DeFi, using cryptocurrency and by extent blockchain technology. And that's it for today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.